The range is found on the 4 hour. So our last dealing range, we want to find this on the 4 hour. Sometimes it might be looking like a one or two candles that look like ass. So we go down to the 1 hour. When we go down to the 1 hour, it might look like this. If we see it like this and we want to start marking our zones, and let's say we're like, okay, we understand that, hey, you know what? Looks like a great zone on the 4 hour. I mean, on the 1 hour, and we want to kind of refine it over here. But we still feel like it's a big zone. How in the world are we going to trade from that zone? So we go down to the 15 minute and we see that, okay, everything here is mitigated or whatever, which is basically what we're going to talk about later. And we kind of refine it and have it on the 15. That's it. But I don't want you to go on the 15 because this over here, all of it might look like this part only on the 1 hour. So if you do that, you probably only have this on the 15, where realistically it should probably be something like this on the 15. Let's say the 1 hour is this, and that is the last range. And then you have your zone be something like this. And then you go down to the 15 over here. And if you didn't look at this one over here and you just started on the 15, then you would probably be doing this. And like, okay, this is my last range. I'm just gonna, buy from here and then boom. But on the 1 hour, you clearly know that this is the extreme zone. And it is probably nothing because you didn't see anything happen on the 1 hour. But if the 1 hour shows us movement like this, and then you go to the 15 and you're like, oh, that makes sense. Or actually, maybe let's do something like this. That makes sense. Oh, this could be a key zone. Now, you know that price is probably retracing, and you know that this over here is not a bullish break of structure, but simply a manipulation so people can enter buy positions and then we could take them out. Okay, so for now, we have talked about external zones, internal zones. We have talked about bullish, bearish. We have talked about extreme demand. We have talked about key demand. We have talked about extreme supply. We have talked about key supply. We have also talked about break of structure. Now, we have also talked about the difference between a retracement and a reversal. If you don't get it, a retracement is just the market, if you want, catching its breath. Price needs to always come back, grab the orders, rebalance, and then continue. A reversal only happens when the structure breaks the other way. So the logic is basically simple. If we have bullish, then the higher low must remain intact. If we have bearish, then the lower high must remain intact. If the higher low breaks, we have a reversal. If the lower high breaks, we have a reversal. This is basically the backbone of a clean analysis. Let's say we have price doing this. If every break of structure, basically every break of structure has a supply zone. But the reality is this is probably one push. Then we have a retracement, and then we have another push, and then we have a retracement, and then we have another push, and then we have a retracement, and then we have another push. This is basically how a bearish market looks like from the outside and from the inside. If each of these zones are marked as supply zones, then you basically have the opportunity to buy and sell from every single 5 or 10 pips. But that means this is what a confused trader would do. They would have, every time you see a break of structure, like, okay, supply zone, great, I'll just buy from here, I'll just sell from here. But all these get sliced through and you don't understand why. The two supply zones that we care about are the extreme zone. So let's say we have a push and then price has entered a new range. But before it has entered a new range, we had something like this happen. That push was broken and now we have a new low. The origin of that low is this lower high over here. Lower high or higher low become extremes effective immediately. Now, that extreme didn't just slide through in one singular motion. We had price range, and then we had something internally, a structure internally, not only breaking the structure internally, but also moving to a new external low would give us our key zone. For the retracement, obviously, I will teach you about the confluences that you need over here, or why this zone is probably important, and maybe you don't need to look at this, or if this was breached through, what do you do next, etc., 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 or if it was valid with the confluences, how you target the lower low. For now, all you need to care about is the key zone and the extreme zone.